Hello traders and welcome to this pre-webinar video series. It's still up on here, founder of Master the Markets Illiteracy Conference and the Traders Open Day. So here we are on this video series just before the live trading webinar that I just wanted to give an insight on what we'll be looking at into the webinar, and then you can get used to some of the terminologies before you join us. Now in this first video over here, I just wanted to take a look at first before you start doing intraday, and for this it's also for traders who are already trading intraday. The first thing you need to do, traders, is to get a directional bias. Okay, now the directional bias would usually be formed on a higher time frame, all right, rather than the time frame that you're going to be trading on intraday. So this directional bias, the way to do it is, the first thing you need to be looking at is whether the move currently is a bottom to top move or a top to bottom. Now, what do I mean by that? Now, to quantify that, to determine that, the first step you need to do is have your highs and lows quantified. As you can see over here, Master the Markets, we have it all quantified here. Not according to fractals or whatsoever, basically due to algos on price-based algorithms, all right? And that's how we have done that. It's the most, I won't say and pride that it's the best one out there, but it definitely gives you a very good model to use and to keep your system consistent and quantified. Okay, but of course, as far as we have researched and seen, this way of quantification seems to be one of the really best way of capturing very big moves. So that's the first thing to do. All right, traders, you can either use the smart money indicator that we got, and you can always contact us on how to get one for yourself. And once you have that, or you can use your own way of quantification to determine a bottom to top or top to bottom, but do it in a quantified, consistent way, because it's very important to form your directional bias. You see over here in this example, on this cable GBP USD, this here is a bottom. The bottom has already been confirmed by this dot over there. So this is a bottom to top move. Okay. Now, once you have done your bottom to top move, okay, this is a bottom to top, not a top to bottom. So this is a bottom to top move as of now in real time. Then the second step, all right, after this step, okay, let me just call this part one. And after that, we go on to part two, okay. The part two is where we establish how much of a swing distance has it moved from its bottom. Now, how do I do that? Let me take you step by step. Now, the first thing first, look at this bar which we call the swing bar, right? The lowest point of this bottom to top move, all right? Now, in this bar here, I would like to find out the ATR, the average true range. That means basically all it's saying is that the average range of all these bars, of the last 10 bars. I put my cursor here and I read out this number over there. Now, over here, then you can see that that is about 73 pips. All that is saying is that from high to low, the average for the last 10 days is about 73 pips. So once I have that 73 pips, then the next thing that I'm going to do is measure the distance from the bottom to the top over there. That is about 156, because remember, simply this is the top and that is the bottom. Now let me just zoom in a bit more so that some of you can get a closer look on this. Right, so you can see over here that that is the bottom there and this is the top, right? So 73 all the way up there is about, let me just get that, it's about 163, okay? 163. Now, let me just see, out of this, let's say we just make it a bit more standardized. So this number divided by that, right? 163 divided by 73 is what we need. Okay, so let's do that in this calculator here. 163 divided by 73, that's about 2.23, okay? That's about 2.23. So it is 2.23, and this is in terms of ATR. Remember, the 73 pips was 1 ATR. So 163 divided by 73 is about 2.23 ATR, okay? So let me clear that now. So now, from here to here, you've established that the swing distance is about 2.23 ATR. Now, why do we need that to form our directional bias? I'll explain. This is what it has done so far. In our research studies over here in MTM on price studies, price research studies, what we found is that 55% of them, 55% of swing moves, bottom to top or top to bottom, will cover at least 3 ATR. Okay, so you can see that from where it is at the moment, there is still a little bit of what we call open equity left. Okay, open equity left. That's about 0.71 left. But remember, that doesn't mean it can't go more than 3 ATR. Of course it can. But all I'm saying is 55% of them will get there. And if you are like beginning out, or if you want to get a system that's systemized and much more easier to follow, I would say, first start off with 3 ATR. And as you develop and get more experienced, let it run to more than 3 ATR. Then you'll be able to identify the ones that's going to run or that's not going to run. Right? So we have a bit of a distance to go. So that's all good for tomorrow. So the first thing that you need to do is form your directional bias, which is first identify whether it's a bottom to top or top to bottom. The second thing is that find out the swing distance that has moved to see if there's still a lot of open equity left. Open equity is whether there is still room for it to move towards 3 ATR is the level that we're using at for now for intraday trading. Okay, so in here you can see that it's less than 3 ATR in terms of open equity. So first thing is bottom to top or top to bottom. The next thing is about open equity. And then finally, traders, then we take a look at the bars themselves. Look at the bar themselves. If it is all up bars, right, you can see that they're doing higher highs. But you can see this one here is an insider bar, isn't it? But as long as we got up bars here, okay, what we do not want, let me just show you what we do not want. What we do not want to take a position is where we got something where it's going up, 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 up. Let me just erase that. Let me just put a green one. So if let's say we did something like that, it went up and up and up, and then today it did this. Okay, today it did this. Now this is the thing that we would not want. Okay, in this simple example that I'm showing you, because this is just one way of trading. All right. So if you got an example like that, where it's now made, this bar is made a lower low than that and a lower high, then yeah, then the next day I wouldn't take it on towards the upside, even though it's showing a bottom to top move. Okay, you can on a different type of strategy, but for this, I think we'll keep it simple for this video series, and we will not take this kind of setups. Okay, in the webinar, if there is opportunities like that, then we'll take a look and we'll look at exceptions and all that. Okay, in our live trading webinar. Right. Okay, so that's good then. So just to recap, the first thing to form a directional bias up or down, the first thing that you need to do is establish whether it's a bottom to top or top to bottom move. All right. In this case, the bottom to top. The next thing that you need to do is find out how much open equity is left, whether it's less than 3 ATR or more than 3 ATR. Okay, if it's more than 3 ATR, we would not take that. All right. The final thing that you then take a look is whether we have, in terms of a bottom to top move, whether we have down day bars, all right, lower low trending bars, or top to bottom is higher high trending bars. Okay, that's what we are looking at. And if we do have that, then we do not take the trade as well. In this case, it's not, because it's an insider bar today. So we are good to go up tomorrow. All right. And I will show you, and you can take a look at this in the intraday tomorrow and see how it performs. And I will take a look at it as well and update you all. Okay, so that's to do with that, is it not? With cable. Now let's go through the same philosophy here, through the directional bias. First of all, you have to establish whether it's a bottom to top move or not, or a top to bottom. In here, what is it, traders? Have a think. Right. Most of you would have guessed it right. It's a bottom to top move, right? And in the bottom to top move, then what you got to see, the next thing is whether it's less than 3 ATR or more than 3 ATR. If it's less than 3 ATR, we can take the trade because there's a lot of open equity left. Again, I'll put my cursor, I'll take the ATR of this bar here, and that is going to be 70, and that's 164. So there is space to go to 210 pips. 3 ATR is about 210, right? So that's another tick as well. Open equity, there's a tick as well, okay, towards the upside. Now the next thing then, traders, is to see, do we have, this is a bottom to top move. So the last thing I want before I do not want to take a trade is have lower low, lower high bars. And at the moment it's very clear I do not have that, so I can take this, right? So it's all higher highs and higher lows, okay? So this is all good to go. Then the trending bars, criteria is fulfilled as well. So we can take a look at these three criteria and we can then decide our directional bias. All right. So the final thing also I just remembered is that you only can take a trade once the low has been confirmed. Okay. That means after the, in this case in the smart money indicator, is after the dot has come on the confirmation bar. All right. So good. So we're all good on that, traders. So go to euro dollar. You can see, yeah, look at that. That's a top to bottom move, right? So that's the first thing, top to bottom move. And then the next thing we need to do is find out the ATR distance, right? 55 pips here. This is 188. 55 times 3 is about 165, isn't it? So this is definitely more than 3 ATR move already. So we would not take that, all right? So we're not going to take that one there. The next one is on the Dow Jones. The confirmation was that is again this is a top to bottom move. We can clearly see that 161, um, yeah, 161 points over here is what we got, and then 480 easily would have been done by here 380R, right? So at the moment we are more than 380R, so we can't take this at all. So what do we have? The two things that we can look at tomorrow is one is this one here, which is towards the upside is what we're looking at, and also the dollar Swiss as well towards the upside as well. So that's the two things we'll look at. So just to remember, tomorrow as well, we'll go through it again. Your directional bias is formed out of three things. One, determine whether top to bottom or bottom to top. For that, you have to get your highs and lows quantified. We'll go through a lot of these examples and in real time and how to trade it on the lower time frame in the live trading webinar as well. The next thing then you need to do is basically then look at your open equity. Basically, it's less than or more than 380R. If it's more than 380R, we can't take the trade. And the third thing then, traders, is what we're then looking at is the up bars, right? Yeah, just make sure that you're trending bars, not going against your direction. So these are the three things you need to do before you form your directional bias on a higher time frame. All right. Tomorrow we'll see how this directional bias went in our favor or not, and we will then I'll go a little bit more deeper into a lower time frame and see how we can position ourselves to enter into the trade. Okay, so think about these concepts and we will look at it in the next video as well, and just practice over it. And we will go through this, of course, in much more detail as well in the live trading webinar. So we're really looking forward to seeing you in the other side. So do register and we will love to see you there. All right. So till then, as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.